So talk us through what you made, first of all, of that number this morning, and whether you are a little surprised by the market reaction, particularly the pullback in yields.
Well, let's go backward. First of all, the market came in with a mild advantage this morning. The Friday before a three-day weekend has a 65% bias to the upside. Secondarily, the first 2 to 3 weeks of July, and July is one of the favorable months of the year, not by amount that it's up, by the frequency with which it turns out to be up. So the first 2 to 3 weeks have a bias, not quite as strong as the three-day weekend bias. So the bulls were already in control. They looked like they were in pretty good shape. I would suggest to you that the number this morning was a bit of a Goldilocks number. We have fallen behind Wall Street estimates over the last 3 or 4 times. A lot of people felt that was because both Wall Street and some of the other pseudo-professionals were missing out on things like early retirements and whatnot. So the fact that they came in and exceeded the number was good. It wasn't such a blowout. It didn't change things like the unemployment rate so drastically that it would push the Fed along. So as I coined the phrase years ago, it was a Goldilocks economic number in many ways, not too hot, not too cold, just about right. And I think they reacted that way. I think the yield on the 10-year, we're in a kind of a special place here. You've had Mike and Rick Santelli talking about foreign governments seeing a favorable rate here. You know, everybody's scrambling around looking for some kind of yield. Secondarily, we just went through reweighting in which stocks had done very well, so your portfolio is a little out of balance. So they're probably buying the bond area to try and catch up, and that has supported things. So not a runaway on either side, not what classic economics would necessarily tell you is going on, but in today's global economics, understandable that yields are down.
Shepard Smith here. Thanks for watching CNBC on YouTube.